Hey there, everybody. Thomas with Basecamp Trading. It is Monday, February 12th, and we're going to take a look here at bonds and a little bit of the movement that happened with bonds today and some of the stuff we were talking about in the trading room and how to manage these positions because, as you know, bonds today, as of 2:12 in the afternoon, we rallied up really strong, and then we've pulled back about a 50% retracement on that rally. But if you were in the trading room, you know what happened is a lot of people were coming in here and they were wanting to buy bonds right here at 144 and 8 and right up here at 144 and 14 or 144 and 13. And then again, they were wanting to buy bonds at the very near the top at around 145. And if you were in the room, you remember me talking and saying, look, the thing that you want to be careful of is you don't want to buy at the top, because the further a market gets extended, it will run and you'll have a nice long expansion period, and then it will go back into compression. And what too many traders make the mistake of doing is they look at buying right at the top of that expansion, because they sit there and it goes just far enough that it finally hits that point where they go, oh my goodness, I can't believe I missed this whole trade, it's going to go on forever, and they jump in, and right after they jump in, it then goes into compression and they get stopped back out. So one thing to pay attention to is, where are you trading in relation to the previous compression zone in the market? So first thing this morning, bonds broke out right as we opened the room. They broke out of a compression zone down here where we were moving sideways in compression, and we broke out and went into expansion. When you're trading the markets, you want to ideally be entering right at the start of a compression breakout, so you're at the starting point of an expanding market. Do not make the mistake of buying way up here just because you see this market might look like something like this, where you've run away and you go, oh my goodness, it's just never going to stop, it's going to keep going. And now you're buying at the tail end of this expansion zone, and then it goes right back into compression and you get stopped out. So wait. If you're looking to buy a market, it's okay to jump in, but just make sure you wait until it goes back into compression and then breaks out of that compression, because then you have the opportunity for it to go back into expansion. All right, and you can see here it ended up at short-term compression, expansion, pulled back again, compression once more, and then expansion back up to the highs until you had the divergence and pulled back. So once again, just the main point is, don't be chasing an expanding market. Wait until it goes back into compression. You can see even when it pulled back here, you go from expansion phase down sideways into compression and then back into expansion, and now you'd be in compression once more because we're moving sideways. So you're looking for the setup to occur now. Alrighty, so wait for the compression breakouts. Jump in at the start of an expansion phase, not the tail end of it, and that will help keep you from getting long at the top or short from the bottom before the market actually runs, and it will help give you the highest probability of having that market move your direction rather quickly after you enter the trade. So that's it for today. I'll see you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you're enjoying these videos, and turn on that little alert icon so you can get an alert every time a new video is posted. Until next time, happy trading, everybody.